If you own a home, you're going to be rich in 5 years. Let me explain in today's video. Welcome back to another channel on my YouTube, going over the mortgage news slash rate update for this week. Today's February 10th, and I'll be diving into what happened this week. Kind of another quiet week, but we're ready to jump in. And before we do, don't forget to hit that like button and subscribe. Would love to grow this following and share more and more news when it comes to the mortgage world. So diving in, very, very quiet week. A couple of key things reflecting on last week with the jobs report and then coming into this week. Rates really didn't react that well. Coming off the jobs report and then also getting a really poor bond auction on Thursday. Overall rate movement is we saw rates go up about a quarter to 0.375% over the week. Not good, not the way we want to trend. Eventually we'll just keep trending down, but seeing these weeks where we jump up, it's never fun to see. I still have faith over the long term, rates are going to come down and that will help the housing market. So let's jump into some of the highlights that we saw through this week. One, mortgage application data. We had purchase applications rise another 3.1%. So that just shows more and more people are coming into the market looking to apply for mortgage purchase loans. And just overall activity is building. And I want to talk on that a little bit more later on. Next, we had Jerome Powell speak up. He spoke on the BLS jobs report last Friday. He basically said they're going to be taking these reports at face value. So if they're coming out and they're looking negative, the Fed has to react to that. I spoke on this last week that the jobs report kind of came out a little fishy. The numbers don't seem to add up with a bunch of people with a bunch of companies laying people off, or the thought of a recession coming, and then we gained 500,000 jobs. The numbers aren't lining up. There was new data and different little applications of those numbers that were put into play in January that weren't used before, and that's what messed with the numbers. But Jerome Powell saying, hey, if those numbers are coming out that way, we have to react that way. So what that means for us in the mortgage world and whatnot, we're just hoping not to see those negative numbers, even though in reality they're not true. We have to avoid these negative reports. The Fed will continue to try and stomp down inflation. Investors will try to protect themselves with rates. Next and last thing we had, which was a huge one. So Zillow and Pulsenomics, they came out with a home price survey, and what home prices are expected to do over the next 5 years. They surveyed 150 top economists, and the average appreciation rate over the next 5 years is going to be about 23%. That is amazing. If you were to purchase a $500,000 home right now with a 23% appreciation rate, you'll make $115,000 over the course of 5 years. That is some insane equity gains and another reason to want to buy in to real estate. Like I said at the top, that is how you're going to become rich in 5 years. Purchasing a home, holding the home for 5 years, and the average expected appreciation rate of 23% will make everything fly up. Now, I wanted to talk on something, a little bit of a bonus topic today of just like market analysis, what I'm seeing in some of the states I'm licensed in. Obviously, different places are a little different when it comes to the activity that's happening. But overall, I'm seeing activity that I didn't think we would see in the early parts of 2023. We have a lot of home buyers that are hitting the market, and our inventory is just not ready for it. We have a lot of people who are just putting their foot down saying, I'm making home ownership a goal in 2023. I've said it before, but it's going to be interesting going forward because as rates continue to decrease, competition will bring the rates decreasing will bring more people back to the market, increasing competition. And I really hope that we can get our inventory levels up so that we are able to take on that buyer demand. We are already in a situation where I'm hearing from multiple agents around the country that we are in multiple offer situations. This is more specific to maybe starter homes in the lower price ranges of maybe 350 to 500,000. Those desirable, affordable homes are going to get multiple offers. And we're starting to see that and potentially losing seller credits and little things like that. But that is kind of what I'm hearing. I would love if anyone was watching and put in the comments little things that they're noticing around their specific markets, anything that they see that might be worrisome or a forecast or something you're seeing on the horizon that you would like to chime in with. I would love to take in as much information as possible and see what's going on a macro level across the United States. Overall, like I said, rates ticked up. I'm not worried. It would be nice to see a rebound next week. A lot of big numbers coming out next week. We have the CPI, the Consumer Price Index, which is kind of the leading report when it comes to inflation. And we also have the Producer Price Index, which is directly correlated to suppliers. So we're hoping to see some inflation numbers come down next week. That would really help rates and maybe get us back to where we were last week. Overall, slightly quiet week. We'll bounce back, but really looking forward to see what we can do in the market. And like I said, just getting back to a normal, stable market will be amazing. With all of these metrics, we will get there. It's just going to take some time. But that is all I have for you today. Thank you again for tuning in on the little bit of info I had for you this week. And like I said, hit subscribe so you're not missing anything, and don't be afraid to get into the comments, and would love the interaction. So take care, everyone, and have a great rest of your week.